Hey guys, what's up? PipSnipers here, back for another update. Let's take a look here at BTC. Now, what do we see here on BTC? We have come up to the November 14th to November 17th range. Like we said here in the Discord, take a look here at my post in November 25th. I did say that shorts were covering here. We were slowly grinding up for what's called a wall of worry. And within this wall of worry, you're going to have high velocity moves, but within its own range. So you see how fast this move down was, right? But it's still staying within the range. And then you're going to have a period of overvaluation where shorts will start, those who are short covering in longs are going to start flipping back into shorts within that red region. This is exactly why we ended up taking a long. So we were over here. This was November 23rd. I spotted this bullish ascending triangle and we did take profit with over 7,300 pips. 75% of the trade has been taken. 25% is remaining. You can see how perfectly we hit the take profit and then we retraced. We've been retracing for about 12 hours now. So we perfectly hit the TP and now we've been retracing for 12 hours. Okay, there's a reason I put the TP here because that's the low, that's the high that was back tested within this range, within this November 14th to 17th range. I kept pointing this range out in the Patreon, right? Notice how you have bulls and bears fighting back and forth here. A lot of contracts have been traded and we can use the point of control tool to see where the most volume was located, where 70% of the volume was located right over here. So we haven't fully tapped into that range, but we've hit at least the range low, which is over here, and we've hit it. So we perfectly hit TP. 25% is still remaining in the trade. Now, there's a reason I'm not flipping short yet. The reason for that is because we have equal highs here. So this is what's called our equal high buy side liquidity. And it means that sell stops are located above this high. Okay? Especially from moving average traders who are trying to, say, okay, this is a bearish back test. So they're going to short here, right? It would just make sense. So you have your equal high buy side liquidity. You have a back test of the 21 day. I mean, we could end up nuking hard and dropping here. Hence why I took 75% at this level, right? But right before the weekend, when liquidity dries up, we ended up creating equal highs. You guys see? So we may see a little bit of a retrace and then it may come up like this. And I want to look for a sweep of these equal highs. And then if I start to see the move fade back down below this high, then you would take the short down to this low. Okay, so the reason you wouldn't enter the short now, even though everyone is itching to enter a short, including me, even because it looks so bearish, the reason I'm not is because we're going into the weekend where liquidity is the lowest and we're very likely to see high manipulative moves, but we also have equal highs. We also printed equal highs. So this is our equal high buy side liquidity. I'd want to look. So where are you going to place your stop loss? If you entered a short, right? You put your stop loss right here above the equal highs, but that wouldn't make sense because you run the risk of the price coming back towards it. So what you'd want to look for is high quality moves, and you'd want to enter after the sweep, but only on the condition that the price starts actually fading back down below these range highs. So this is where you take the short, or right here, I'll show you guys. you short right here. Let's say you don't end up shorting here, right? Let's say you ended up shorting here. You'd place your stop loss at this high. And you'd want to look for a high velocity move and then a wick. Just for a little bit more confluence. You won't always see a wick, but if you do see a wick, that's more confluence as to this being just a pure sweep. And then you would take the short all the way down here, like this, right? And then this over here would be considered our trendline liquidity, right? So you see, you not only have shorts piling up here, short stop losses, but you also have longs placing their stop here, right? So even though it looks like a really juicy short right now and the price could come down really hard, I want to look for high quality setups in which we can place our stop loss in a reasonable and safe area so we can snipe it, right? We want to look for those high velocity moves. This was considered high velocity, but it kind of, this over here could have been the top, and then we come down like this. But in the case that we lose this high right here, that's at 88,250, then it's very likely we're going to have continuation down, and this was the top. However, considering the conditions that we currently have going into the weekend, creating equal highs, not fully tapping into the November 14th to 17th range, it leaves me to believe that we're going to have manipulation here, and you're going to have a lot of people shorting, but the price may end up just gravitating up like this and then dropping. So that's why I haven't taken this short. However, I have taken 75% of the position, or we have, for all those who have taken it with me in the Discord, we can see that we're still within Wyckoff distribution. We finished the distribution part, and now we're in the markdown phase. So if you were to flip this chart, you can see that it's Wyckoff accumulation, right? This is your accumulation, all of this, and then this is your manipulation under the range, and then you have your jump across the creek, your test, and then you're continuing up. This is your markup after your spring and your accumulation. So you have accumulation. Sorry, let me remove all of these drawings so you can see a little bit better. Take a look. This is your accumulation. Accumulation, manipulation, and then expansion. So we're already in the expansion phase of the bear market. You can consider it like that and take a look at it from that lens. So what I'm thinking over here is we can drop like a brick and go below 82,192, but that would only be confirmed by a move below this structural support. Okay, and that is around 88,500 area, around there. So around this area. Sorry. This area. Okay, if we drop below that, then it would be confirmed we're going. However, considering the conditions, we may see one little push up into this point of control where 70% or more of the volume was located. You see this yellow line here? When you measure the volume from November 10th, the swing high, down to the swing low on November 21st. Now, in the grand scheme of things, this just looks like we're still within a wave 3. And everyone is thinking, I shouldn't say everyone, I should say most retail traders are thinking this is actually the bottom and we're going to come back to the 200-day moving average. But what I would propose is right now this is a fake out. We're going to see one more really big push down to around the 50% fib, to the equilibrium, of this of the entirety of this range, all the way from 2022. So you can use these fibs kind of like a measuring tool in regards to how overheated an asset is. So we've only hit the 38.2% fib. But in a downtrend, you know, you're going to want to see the price come back to the 50% at least, like after the top is in, because this would be considered the equilibrium of this range. Okay? So coming down to the 38.2% fib, and then when we look closer, you can see we had a bearish backtest of the 21-day moving average. You see over here? However, equal highs on the weekend. You're going to have these moving average traders placing their stop over here. So I think the price may gravitate like that, like wick, or have a manipulation wick and then come down. However, in the case that it doesn't retract back below the range, then it's very likely it's going to come back up to this moving average cluster around 102 to 109,796, and then turn down from there. So you have 2 points of 2 inflection points. Okay, let's go back here. So now I would propose that this is just a small corrective move up before we have this big move down, to the equilibrium, because Bitcoin is still in oversold territory. But once we get down to the 50%, that would be an EQ. And then once we get to EQ, I think that's when we have the move to the 200-day moving average. Okay, with this ABC right here. Okay. Or we could have it now. But that would only be confirmed by a move above that 21-day moving average. Take a look. Right here. Okay. And we need to stay above it. If we can stay above it, then yeah, it's going to come up to this moving average cluster first and then turn down. But I think this is going to be this move in particular is going to be very short-lived. And then we come down like that. Right? Or we go up one more and then we come down like this. Okay? Just for those who want a very clear and simple explanation, that's what I think we're going to do. And then that's just a wave 4 or it'll be a wave 2 or a B wave. However, I think it's going to be a wave 4 up. And this wave 2 is very simple. Very, very simple. So I'm thinking this wave 4, it's going to chop out a lot of traders. And it's going to make people feel all different types of emotion. But it's going to see the retrace eventually back up to the 200-day. That's what I'm thinking, right? That's the base case. However, it may not happen now. Okay? Once we get that move up to the 200-day, alts may catch some steam, and we'll have to monitor Bitcoin dominance from then. But if we see it turning back down, then I think we have another 5-wave move to around 54,000. So the 618 is at 56,000 right here. However, what I'm thinking you're going to see on the small time frame is the price wick below the 618. A lot of traders will think that, oh my God, the price lost the 618. Let's go short over here. It's going to wick to 54K, and then that's going to be the bottom, right? Or that's going to be a very strong bottom. Now, the reason I say 54K is because if you take a fib from the low, the last swing low, to the last swing high before the price change structure, and take a look at the 3.786 or the 3.702. It's right at 54K or 55K. Okay, right here. Do you guys see? So something along the lines of this. Okay? Something along the lines of that. It may not happen that way, right? It's just a drawing. Market can change. No one really knows how it's going to play out. But what we can do, or what I can do, is give you the best interpretation possible of the current price action we have at hand. And right now we've created equal highs. We've come perfectly up to our take profit level, and then we've retraced for about 12 hours now. And over the weekend, we may see that last push up. We may not get it. Okay? We're going to see it, and then we're going to see it come down, and then it's going to go up. Okay, I hope you guys enjoyed the video. If you guys have any questions, please feel free to let me know. Peace out. Take it easy. See you on the next one.